What's up, everybody? Welcome to another episode, I should say live stream of In the Black. I'm Mike here along with Troy, and we're going to keep riding the wave. We're going to keep talking about what's going on with AMC and GME and how far can this rocket ship truly take us. Some people think that GME has reached got into orbit, and they're going to kind of hover at that point. Some people think GME has much further to go. I don't know. It's interesting. Nobody knows. If anybody tells you they know for certain, they're lying. People can make their best educated guess. I've been seeing a lot of misinformation online going both ways, for the Bears and those for the Bulls, for both AMC and GME specifically. And some of them make good points on both ends. And I think what you need to know as a prudent investor is you have to digest the arguments from both sides and shift the wheat from the chaff and make up your mind for yourself. You got a lot of people that are pointing out statistics and facts that don't add up. There seems to be a lot of conflicting information, and some of that we're going to discuss here today as well. This is uncharted territory. If someone's saying that this is something that has been seen before, or they're going to give you a comparable comp, I see the biggest comp I see constantly brought up is the Volkswagen squeeze that happened back in 2008, I believe. This is different. This is the retail investor, as you will, your average investor. We are the ones that are feeling this upwards pushing momentum for all these red stocks. That wasn't the case with Volkswagen, but this is the case now. This is more than simply just trying to make a quick buck. I mean, don't get me wrong, there's a lot of people out here trying to make a quick buck, but I think the moment they get in, the moment they start reading forums and start engaging with each other on Twitter and Facebook and all other places online, it becomes more than an idea. It becomes a movement. And that's what we're seeing is a movement behind these stocks, and that's why it's so powerful. So everybody wants to know, how long can the movement last? Can the movement get any bigger? And the cut to the chase, the movement needs to continue to get bigger. It needs to continue to have more people invest into the stocks in order for the price to go up. Right? You want people buying the stock, so the price can push up, causing further pressure on these people who are the short sellers. If you don't have new people, new blood come in, then this will, at best, reach a equilibrium. But most likely it'll start retreating as people take profits and see that this is not going anywhere. But do I think that there is still a lot of new blood to be pumped into this machine? I do. The reason behind that is I have people who don't even know anything about stocks asking me what's going on with this GME. What is GME? Why is everybody talking about GameStop and AMC? Right? It's in the mainstream media. It's in the social media. It's all over people's timelines. And the more people see all these things and these memes, this meme culture is real. Meme culture can take over a timeline, somebody's timeline. And more people who see about this, and when they start learning that, oh, wow, people are really kind of sticking it to traditional Wall Street, and making some money along the way, it's going to be kind of infectious, if you will. It's almost, if you guys remember, I forgot what they're called, those circle things, Troy. Remember when people were saying you can join my circle?
Talk about those susus?
Yeah, whatever those things are called. Yeah, I'll give you send me $50, and then everybody you buy somebody, they also send you $50, and somehow it's supposed to end up back to you, right? Even though clearly that was a pyramid scheme, you take that circle and expand it out, it makes a pyramid. Even though it's clearly a pyramid scheme, it caught on and it got really hot. Now this is a lot different because this is not necessarily a pyramid scheme. It's not a pyramid scheme at all. This is people coming together. People come together to save a business. There's a narrative behind it. There's a story to be told. People are coming together to save GameStop, a beloved place that a lot of teenagers and kids will go to get their games back when the era we were growing up. This is a story to come together to save AMC. Look, people are tired of having to watch these new movies come out on their, at their house. Even if you have a nice TV, you have a 70-inch, 80-inch TV, it's not the same. It's not the same experience as going to the movies. Even though they overcharge for popcorn, and even though the seats can be sticky and stuff, or be sticky and all that, it's a certain je ne sais quoi about going to the movie theater and just having that theater experience. That's one thing that Christopher Nolan said when he released Tenet. He was hell-bent on releasing it during the pandemic, no matter what. It's because he said, I shot this movie to be experienced in theaters. You want to experience it in its intended format, in that intended location. And I think, people, as the vaccine continues to go out and roll out and people get more comfortable, more people get vaccinated and things slowly start opening back up, there's going to be a demand to go in the movies. There's a lot of movies that are sitting there on the back burner that were meant to be released last year that just haven't been released yet. It's a lot of movies that are going to set the theater market as soon as the green light's given for most theaters to open back up. And I understand that AMC, like I said, it's international, so you have this across worldwide of trying to go and enjoy movies and get that sense of normalcy, back to your life. And I think that's one of the powerful things that people that you see on CNBC and you see on Fox Business and all these other Wall Street Journal, they don't understand the narrative behind it. They don't understand the why. They think it's just a bunch of mean, crazy millennials just don't know what they're doing, FOMO into a stock. And that's far from the case.
One of the interesting things that has been brought up, and you mentioned it, two things. Number one, it's the condescension. We spoke about it in the past week. There's been a lot of condescending talk. Like I said, every time you hear somebody on the news talk about retail investors, they mean the average Joe. They mean you and me, and everyone else out there who are new to stocks and don't have, $1 million portfolio. People have done their research. People have done interesting work on the back end of short squeezes. If hedges are going to be allowed to force down the price of stock, then regular retail investors, again, us, regular average Joes, have the right to play the other side of that bet. And you touched on something important. They spoke about it with GameStop, and it's also going to happen with AMC. This may be the only chance AMC and by direct result, movie theaters have of surviving this pandemic. AMC has been able to raise a lot of capital in this. Their stock price going up might save their very company and save movie theaters as we know it. It's hard to get through an entire year of zero revenue, and that's exactly what the movie theater industry has faced due to this pandemic. They have to somehow survive even longer as we see this pandemic isn't quite over as we approach 1 year. So being able to raise money on their stock, being able to raise capital to survive and not go into outright bankruptcy might very well save movie theaters as we know it for the future.
And jobs.
And jobs, and all the jobs that come with it. There's thousands of movie theaters across the country, and investors have the right to make that decision. And that's one of the things I think a lot of people on Wall Street do not want. They call us unsophisticated investors, but we have a right to vote with our dollars, and that goes beyond the consumer end. People are now taking it to the Wall Street end. We have a right to buy shares of a company that we believe in, and we obviously understand why their financials are bad. Their CEO said it. Their revenue went to zero overnight due to this pandemic having to shut down, and it's going to be a long time before they can get back in. So, hedge funds shorting that stock ensure that they're driving that stock price to zero and make the company worthless. That's a punishing reality. And when hedge funds short a stock, that's the reality. They're hoping that stock goes to zero. They want that stock to go to nothing, bankrupt the company, put all of those employees out of business. Can you imagine American malls and strip malls and town centers are already struggling? Can you imagine if those movie theaters go empty and they don't exist anymore, and you just have these spaces designed only to be a movie theater. What are you going to repurpose those as all across the country? They want people to lose their jobs. And we don't have that conversation in America. We don't talk about that directly, but that's a punishing reality when it comes to hedge funds shorting a stock. So people have decided to jump on AMC. And if we can just pull up the last 5 days here up in our top right corner, AMC was had hit a peak of $20.30 on Wednesday. Then it rode a wave throughout most of that, back up to $20 at the end of Wednesday. Then, of course, on Thursday, Robinhood limited the purchases. So again, we had the situation where the majority of your retail investors, your average Joes, were unable to purchase but could only sell. And it caused the stock price to fall again. It went all the way down to $7.51. And see, here's what sucks about that. That's a great buying opportunity right there. I don't know about you. I tried to buy 100 more shares down in these prices. But again, Robinhood had restricted the purchasing of shares, and that artificially drives down the price. That's market manipulation. I really do hope lawmakers investigate that. We saw lawmakers on both sides of the aisle talk about that. I hope they're dead serious and keep that up. That needs to be investigated faster than any Reddit, subreddit, or chat room discussing stocks. The stock rebounded nicely. So if you bought in this low on Thursday at $7.51, you got to almost double your money by Friday. The moment they allowed just limited purchasing of stock, I think they capped it off at 115 shares each. So that's 50% gains that they denied a lot of investors, such as myself. And we see this kind of wave ride out. We're at 1326 now. If there are no restrictions on purchasing, I can see the stock easily getting back over $20 to $25 range. And where it goes beyond that, can't speak to that one, but I think that AMC can get back to the $20 range. That would be a significant increase on the current stock price. At this point, we have a battle and we have a war for who will control our financial markets. And what's amazing about hedge funds, you don't start a hedge fund without significant amounts of money. These are rich people who've already made their money in other areas of finance, many of them becoming billionaires, and then deciding to open up a hedge fund to literally drive companies into the ground. It's an amazing thing, and we're supposed to sit here and feel sorry for them and behave as if the entire market is threatened by the actions of the average Joe. That it's hypocrisy, and
that's what they want you to think.
That's what they want us to think.
I've seen articles, just in like Apple, you pull them stocks to give you like a list of articles, and several of the articles were saying that Reddit fuel rally causing potential stock market collapse or stock bubble bursting. That's nonsense. That's nonsense. The thing that would come out of this would be if there was, this whole rally for these Reddit stocks. The worst thing that could really come out of it is those hedge funds will go out of business, right? And then that would teach a lesson to all the other hedge funds. Maybe I should stop shorting companies. That's what will happen. You're not going to see the entire market up and collapse because some hedge funds went out of business. That would just tell everybody that, hey, you can't short stuff without people going out there and noticing it and exploiting the exploitation that you've been doing for decades, right? So the market is not going to collapse. They're trying to make it seem that way. And I think they're also subtly influencing the market as a whole by pulling their money out of a lot of long-term securities to make it seem as though the market's going to collapse and to force Congress and regulators to stop what's happening. I don't buy it for a second. If it's fragile, then we have bigger issues, right? But to me, you need to let the market play itself out. That's the free market. That's supposed to be capitalism. The strongest survive with the strongest. So,
if we're going to have a free market, then it must truly be free. And these are the realities of it. If you're going to play the short side of something, you're going to play the long side. But what's also happened is, on one hand, hedge funds have had to sell other holdings to cover their billions of dollars of losses. Such massive sell-offs in so-called blue chip stocks that I'm sure they're holding has resulted in stock prices retreating some, as we saw at the end of Friday there. And that is going to present a interesting buying opportunity in a lot of the so-called blue chip stocks. We saw everything from Tesla to Facebook and Amazon retreat in the coming at the end of Friday, and that's going to provide a lower price for a lot of people to buy and get in, especially those who reported positive earnings.
And well, let's put this out there at the beginning, but further reiterate, we are not financial advisors.
Professionals.
I am not giving you financial advice. I'm just telling you my thoughts and opinion on things, but you need to do your own research. No matter who you hear it from, it's always good to go back and do your own research and to come to your own conclusions before you do anything. One thing I will say is always never invest more than you're willing to lose. And also, never go all in on one single position. I know you see it's cool.
One basket.
It's cool to see on Reddit where you see people making astronomical gains. And yes, they got an early. Well, yes, a lot of them put all their eggs in one basket. Yes, it worked out this time. But the law of averages says if they keep doing that, they'll go broke, right? Mm-hmm. You can't do that, right? You have to be a wise investor. Fooling their money going to be soon parted, and that's not a good look. So it's tempting. It's tempting because this sounds AMC, GME. They sound like, especially AMC, because the thing between AMC and GME, AMC, I believe, his market cap's around $1 billion. So you got what GME's market cap sitting at?
Let's see. You said GameStop?
GameStop, yeah. What's GameStop's market cap? I know something astronomical.
$22.67 billion.
So $22.67 billion. So people think we can make the stock run up 22 times higher for AMC. That's not the case, and there's a couple of reasons why. One, the short interest isn't there, right? GameStop had over 100%, close to 140% short interest in the stock. AMC, you'll see numbers going around between 30 and 40%, right? That the short interest just isn't there to make it that meteoric of a rise. Not saying that some serious gains can't be made. I don't think you see this stock double, triple, quadruple. That's a huge win. Some people want the home run 22 times from here. That's probably not going to happen. That's unlikely. I think you should know that going in. You still could make some serious money. Also, I'm seeing a lot of people, they're posting that on Monday, halfway through the trading day, all the a lot of the shorts have to close their positions and buy the stock, which will cause the price to run up. And I see some people saying, no, that's going to happen on Tuesday and Wednesday and yada, yada, yada. Look, to be honest, if you guys just do your research, like I say, because you'll find out that a short seller is not required to close his position on a given date. It's not like an options contract. Right? A short seller is obligated to close their position and buy back the shares when the person they borrow the shares from tells them to. The person who borrowed the shares from can say, hey, I want my shares back by tomorrow, and then they will have to go out and purchase it, right? So the short sellers can keep playing this game and just wait it out, right? They don't have to buy back shares on Monday. I don't know why that's gotten out there. It's got some traction, but that's not true.
There's a lot of misinformation floating around, and part of me wonders how much of that is legitimate ignorance and how much of that is people, quote unquote, powers that be desiring to lead people astray so they could stop listening to, the highly successful chat rooms and Reddit subs and things of that nature.
And here's why that's dangerous. Because what's going to happen is people are expecting that on Monday and Tuesday, the stock is going to skyrocket because all these shorts are closing their positions. And that doesn't happen, then they're gonna get scared. They're gonna get paper hands, and they're gonna bow out, right? Even if they got to settle a loss, they're gonna bow out. I think that's very risky. I think you need to see it through. I think you need to do your own research. But as for me, what I plan on doing, I Monday, Tuesday, no matter what, I evaluate on a week by week basis as I sell my options anyway. And for this week, barring some catastrophe, probably for this week, I'm staying in, almost regardless. It has to be something totally from left field to make me change my mind at this point. But I'm also being realistic. I'm not expecting to wake up Monday morning in pre-market. I see the stock price already doubled. At Tuesday the price is tripled, and this is and that. I don't think that. I think it'd be people need to. I think if we get back to $20 by Tuesday or midweek, I think that's a huge success. And think $20 from where we are at 13 right now, that almost represents a 40% gain. That's pretty good. That's pretty good for a few days. That's really good. I think once we get past 20 and past the low 20s, that was the point of resistance for us when AMC wrote up last Thursday before Robinhood shot us in the back, and it came tumbling down. That's where it got to. So I think that's going to be a psychological point of resistance. So if we get past that, then I think we could possibly make for a run for 30 by Friday, and that would be great. That'd be phenomenal. The thing is that you're in on that ride from Monday to Friday, you're going to see the stock go up and down, up and down, up and down. So on the valleys, don't get scared, and on the peaks, don't ride too high. Just be even, because this is a volatile stock, and it's going to make a lot of swings. If you pull up last week's chart, you're going to see it violently swing up and down, up and down, up and down. So don't get scared. That's that going in, that's what you signed up for this stock. It almost moves like crypto to me, how violent the swings can be. So going in, I think we need to manage expectations for next week. I mean, I'm all for it if the stock goes up 10x next week. I highly doubt it. But I think we need to be patient. I do think we'll see some gains. I do think we'll get back to 20. But I don't know how much further we'll go past that, if at all.
One of the big things is going to be having a temper to expectations. Everybody's looking for the next GameStop, and I don't think that's going to happen anytime soon. We're not going to see something go up 1,000, +%. At least not from the social media standpoint, because I think a lot of hedge funds, some have learned their lesson. Some are still shorting the GameStop stock just because it's so high, but I don't think that benefit of shorting AMC at its current price level is there for hedge funds. So it's one thing for them to short GameStop and say, it's not, at some point, it's not going to be in a $300 range. It's going to fall back sub $100. It's another thing for them to think that AMC at $13 is going down to 1 or 7 again. So that pressure is not going to be there to create that short squeeze.
Yeah. And like you said, institutional investors, they have best believe that these hedge funds that have been burning the midnight oil all weekend, trying to come up with strategies and methods they can use to disincentivize and limit how much impact your average individual investor has. They're going to come up with something. I do suspect, I don't know about you, but I believe that Robinhood will probably have some kind of restrictions tomorrow. And those restrictions will probably be somewhat elastic. By elastic, I mean they'll expand and contract depending on what the market's doing. So if things are really volatile at that point, you can see them clamp down. When things aren't as volatile, they'll loosen up a bit. But I expect them to have restrictions. At this point, I'm hoping that if you wanted to get into AMC, you went to something like Cash App or Webull or Fidelity or somebody like that. I personally, I'm in Fidelity. Fidelity didn't do any restrictions last week, so I looked at that and said, hey, I need to get up. No, I just need to start moving my stuff over there. So that's what I did. But at this point, there's other alternatives you can use outside of Robinhood. But I imagine that we'll see something like that. And I imagine we'll see some lawmakers change their positions for it. I'm waiting for that. I'm waiting for them to come. And I think Elizabeth Warren kind of halfway put her toe in the water of saying that, we have to think about the overall health of the market essentially when we see this period of challenging these short plays. So you can already see that the game is going to start being set up that we're going to start seeing politicians turn their back. I think some people who continue to have the back of the average investor, the individual investor, you're going to see people like Mark Cuban, people who are probably like more, I call them down to earth billionaires, right? You know, the ones that are, you have your billionaires that are in the Ivy Pass, and then you have the ones that are more grounded down to earth. A lot of times, those guys are the ones who didn't grow up in money, right? They had to build their fortune, so they understand the plight of the working man. They understand that things are different on the other side of the fence. So I think we'll continue to have them in our corner. But I think we'll start position change. I really do. And like you said, the overall market's down. We also have to understand the possibility of people seeing that the market's down and saying, hey, maybe I'll sell some of my AMC or sell some of my GameStop or sell some of my Bed Bath & Beyond. Let me get some of that Tesla. I mean, Tesla's under $800 right now. I think that's an excellent, excellent price for Tesla, because I think Tesla will be, above 1,200, somewhere between $1,200 and $1,600 by the end of the year. So I think that's an excellent price for Tesla to get into right now. That's something I'm looking at doing, but with other friends, I'm holding on to my AMC. But you can't expect, and I think this is something that it's a kind of a part of the rallying cry is not selling and not taking profits. Don't be foolish.
And I don't want people to kind of get caught up in that zealotry there. There's a lot of people who, I just had it up. The Redditors buy Times Square billboard as GameStop saga rages on. There are people who are committed to the cause, if you will. And they're not selling. They're the diamond hands. They're not selling no matter what, because they wish to pound hedge funds in submission, while hedge funds wish to pound the average Joe in the submission. So for some people, if you turn your profit, it's up to you. Again, we're not professionals, but it's up to you to decide when you're going to take your profits. It's your money at the end of the day. The longer you hold past those profits, you have the risk of losing it all, or gaining more. That's up to you and your own actual financial professional to decide. At some point, everybody has a number in which they're going to sell their shares, take their profits, take it to something else. You talked about Tesla. Tesla's down 5% over the last week, but it is also up on the last month. So you get a chance of an excellent buying opportunity into one of the so-called blue chip stocks. Facebook as well. It's down over the last 5 days, down actually over the last month. But for people who believe in Facebook, and Facebook isn't going anywhere as a tech giant, that's a purchasing opportunity. We have Apple, same deal. Down over the last 5 days, taking a steep dip, but up over the past 6 months. For people who want to get into that, look at this hump you got here, and we're down off of that high, but that presents a buying opportunity. So people can take their earnings, take their wins, take their gains, and put it elsewhere if they so desire. Same thing with Microsoft. Actually, Microsoft is showing up for the last 5 days, but you get buying opportunities all across as the entire S&P 500 retreated 2%. It's up to people to decide if they're going to take their gains. You don't have to be one of the hardcore diamond hands. That's to each individual investor to decide. Again, we're not professionals. For some, like for the AMC stock, I'm holding. I'm going to, they've restricted purchases of GameStop and buy my one share at its current price, and I'm going to leave that in there. Do not get caught up in a social media movement, especially now that we're kind of behind the curve on it. We're 1 week well past this. GameStop is long shot up. So please don't dive out there buying GameStop at its current prices and think you're going to hold and get it to $1,000. That's incredibly risky, professional or not. So, to each their own on that one.
Yeah, I mean, I bought in last week. I want to say it was last Thursday. I got into GameStop, and I want to say my average purchase price was probably about $280 or something like that. So I'll eye this week and see whether or not I want to take profits on that. But part of the reason I did buy it was fresh off the heels of I couldn't buy it on other brokerages, like I could buy it with Fidelity, and I just wanted to almost get behind the movement. So the amount of shares I bought with GameStop, and I'm fine in that account if I was to lose a lot of that money because that was more of my personal, FU to traditional Wall Street. That's why I bought that. So, and that's fine for me, right? That I'm fine making a statement with that piece of money, right? So everybody, like Troy said, you got to make up your own. What's it going to be for you? Are you willing to sacrifice some profits to make a point? Are you willing to, go all in on something that's ran up an incredible amount to run up some more? I mean,
And that's a key thing to point out. If you look at the Wall Street Bets Reddit again, that's wide open. Anybody can see it. There are people in there, to be very clear. They're talking about they don't care about the money. So understand that when you see this here and the Redditors are buying Defiant, there are many people who are in for a move and they don't care about the money. They're willing to lose their investment to prove a point to Wall Street and hedge funds. And one of my favorite movies is The Dark Knight. They talk about it. For some people, it's not about the money. And you see that scene where Joker has the pile of cash piled high. There are people who literally have built up their pile of cash in GameStop. They've rode the wave and gone up 1,000% of their investment, and they're willing to light that sucker on fire to prove a point. So understand that especially around the GME GameStop stock, understand that that's where people are coming from in the Wall Street Bets Reddit. So they're willing to prove their point to Wall Street. They're willing to prove their point to the hedge, and they're willing to light their own money to do it, to make that point.
Yeah, and I understand. Some of these people that are making these hardcore stances are up so much
that they can afford to lose 50% of where they currently are, and they're still making money.
Yeah, so you gotta evaluate, and I know a lot of people are linked to the GameStop train. That's like I said, that's what makes AMC so psychologically appealing, right? GameStop sells a ton of shorts, so in theory, it could keep running. It really could, right? I'm not going to put a cap on it. It's just $5.
They're addicted to shorting that sucker.
Yeah, they're stubborn. They're hard headed. They just don't want to let the average investor win. They want to exert their dominance. It's more of a power play for them at this point for traditional Wall Street. So they're going to keep shorting that stock, and will then continue to short the stock, and people continue to buy it. It's going to keep going up. It's just as simple as that. How far that will go? One's going to get it before the other, right? It's just who's going to give. But for why people why AMC is pretty much number two in this whole Reddit craze is because AMC psychologically is way more appealing. Do I want to buy one of a $300 stock, or do I want to buy 300 of a or 250 of a $13 dollar stock? Right? Psychologically, I'd rather have more than less, right? Even though one may have, we always got to tell you, this is, good to look at. Always pay attention to the percentage gain, not necessarily the raw numbers, right? You want to know how much percentage gain you're getting out of something. Because something, you can look at something and something go from 75 to 100, and you think, wow, that went up, that went up a lot. And that went up 25%. And then you look at something that went from $1 to $2, that's 100% gain, right? You take that same amount of money invested in each, you want to get more with the thing that went up from $1 to $2, right? So don't be fooled by the total amount all the time, but psychologically, like I said, it's more appealing that people would jump into AMC because it's cheaper. They think that they can run the stock up to GameStop levels, and like I said, I don't think that's possible. I really don't. I would like it to. Like I said, I own it, so I would love to be wrong with that. I just don't think they'll get there. I don't know. I don't even think they'll get to 100. But it could.
Yeah, I don't think it's going that far. It's possible.
Yeah.
I'll be happy if it can just make it into the $20, $25 range. It does not have the short pressure that GameStop had and continues to have.
Yeah. The only thing that could, I would say is this. If we weren't in a pandemic right now, I could easily see AMC stock by itself as probably about a $15 stock. Now, you say if everything nobody was trying to invest in it because of all the short sellers and just everything was normal, none of this happened to be a $15 stock. Now with the short sellers in and the individual retail investor charging in with their buying power, that's going to drive the stock up. So I try to evaluate how much more from that $15 can it rise, right? If you add in these extra factors that help propel the stock price, I'm thinking, if we get to 40, around $40, I think that's my best case right now. I think get to 40, maybe 50, but not much more than that. That's what I think. Like I said, I would love to be wrong. So it's probably some of you out there that are going to see this and say, he has no idea what he's talking about. This stock could be a $300 stock easy. I don't think so. But
here's according to Market Watch, this has been updated this morning. The 68 stocks with at least 25% short interest on the close of the 27th last week. You can see where GameStop is still shorted by 120%. So that's going to be an interesting tug of war. Again, it's clear that despite losing billions, the hedge funds are not backing down. But AMC is only at 28%. There's plenty of other stocks that are shorted way higher than that. It's an entire list of them right here on market. That's interesting. I have this one. But there's an entire list that's way shorted more than AMC, but AMC's just become popular through the various social media platforms. That's going to be something that Wall Street's going to have to now adapt with the ease of access of everybody being able to invest, and social media. We know things can go viral. People understand videos going viral. People understand memes going viral and some basic things. So now, what are they going to do about stocks going viral? Lots of people buying a stock will naturally cause a lift in its price. Combining that with a lot of short selling can create those short squeezes. Nothing's close to what GameStop is shorted right now, even still after last week. 120%. Nobody else. I think the next highest one on this list is about 65%. So it's literally double the short. It's shorted at double the rate, at least, than anything else. So the GameStop battle will clearly continue, but don't expect anything else. So don't come in here. Again, we aren't professionals, but don't understand the variables that resulted in GameStop going to the moon, as they say. Nothing else is shorted nearly close to what GameStop is.
Yeah, and it's just like I said, at this point, AMC is kind of taking on a life of its own. I still think it's a good play, but like Troy said, it's nowhere near short enough as GameStop is. But like you said, just interest in the stock and just people buying the stock will cause the price to go up. We're just saying it's not going to go up dramatically, but the price will go up. I think I saw, and this is one of those things where I read it, but someone else had claimed it, and I couldn't find where he factually got it from. I couldn't find a news article. So I'll say take this with a giant grain of salt. But someone had claimed that there was about 18,000 pending AMC orders for open on Monday and Fidelity alone, right? So let's say that is true. That's going to give you some immediate upward momentum in terms of how the price will react in the opening bell. Not to mention people who are coming and going to do pre-trading, right? So those orders, I'm hoping they're not market orders, but if they are, and it runs up in pre-trading, so when the market opens, it's going to run up even higher. So I think pre-trading will be a good a catalyst to see how fast it will they start. If it's up in pre-trading, I expect it to jump up additionally for those other orders that come in. And that was just for Fidelity. So you got to think about all the other brokerages. So it's going to be interesting what's going to happen. We're going to definitely keep our eyes on it. Like I said, we both have a not so insignificant stake in AMC. I personally love the movie, so I'd love to see it thrive. I can't wait to be able to freely go back to the movie theater. So we'll see what it does. We're going to definitely talk about this tomorrow. If there's big movement in the price, we'll get on and we'll follow up and give you our thoughts on any other news of the day or anything. If there's any restrictions on trading. But I do want to slightly shift gears and let's talk about some EV plays. I'm big into EV investing. I'm that's pretty much my majority of my portfolio, honestly, are EV and clean energy. I think I would probably say between Tesla and NIO. Everybody knows pretty much at this point knows who Tesla is. For those who don't know who NIO is a EV automaker out of China. They're very innovative. They're doing a lot of good things, kind of like Tesla. A lot of people call them the Tesla of China. They just released a new sedan. They already had three SUVs in production. They just released a new sedan that's meant to rival the Model S. And they're pretty much they're dumping a lot of tech. That's a luxury. It's a luxury automaker, EV automaker for China too. So they're going after a premium market. And the cool thing with NIO is a lot of analysts are starting to realize its potential. You'll see that it's really on sale right now. And I'm so overbought on NIO. I don't want to buy more shares because I don't want to be that much in my portfolio, but I'm tempted to buy some more because it's on sale right now. I think that you have the stock price up. What is it?
Yeah, right there, $57. It closed down as many other stocks did over the last 5 weeks. However, it's still up over the month. So and it's definitely up over the past 6 months. You can see the rise it made. I remember when it was down at $13. I got on this rocket ship around $27 and managed to ride its wave. It peaked up here, and matter of fact, its high was a 52-week high was $66.99. It's down at $57. And the so-called quote unquote, we aren't pros, but Tesla of China. I'm definitely along for this NIO ride.
And so Morgan Stanley Friday pushed this price target up to the highs of all of Wall Street to $80 for this stock. That shows you at $80, that's a significant gain that can be made between the current price and the $80 target price. And I still think that's undervalued. I think in the short term, NIO for sure will eclipse $100 by the year end of the year. In my mind, I think it will, and it can get much higher. I think it'll get, let's say, the next 3 to 4 years, it'll be a $400 or $500 stock. NIO is doing a lot of things. They have something called battery as a service. One of the big knocks against EV is the time it takes to charge, right? It takes time to charge an electric vehicle. And as they are getting better at fast charging technologies, it still can be a turnoff for some. So what NIO did in China was they did a battery swapping station called battery as a service. So it's like a little garage that fits in about, I think it takes like 3 parking spaces. And they have you strategically stationed across China and their major metropolitan hubs. And what you would do is you would drive up your car to it. You would get out, you would press a button. The car would drive itself into the station. The station would lift the car up, take the battery out, and put a brand new, freshly charged battery in. And the car will drive itself back out to you. And that process takes approximately 3 minutes, right? So that's about the amount of time you spend filling up at the gas pump, right? So they're placing this as a subscription service. So a subscription service, that means that as when you buy the car, you have the option whether or not you can subscribe to this. And subscription services is the key to this because the more that's monthly income, right? Usually when you sell a car and you buy a car, and Tesla started, I think Tesla started doing this weekend. They started first where you could buy a car and then enable certain features at a later date. NIO said, well, we can not just enable it, but you can do a subscription like an iTunes or something like that. And while you want to use it, you just subscribe and it gets a monthly charge. And that's great for NIO because now you have monthly revenue coming in outside of them just selling the physical vehicle, right? It's genius. And they're going to do that same subscription model. They're going to do that with their autopilot, their full self-driving capabilities. They're going to have that also as a subscription service. So when you see that type of stuff, it really, really opens my eyes. I think the problem NIO is going to face in the short term is production capacity. Right now, they're using they're partnering with another company to produce their vehicles. They just I believe it was officially announced that they're building a new factory. The problem is I think they're gonna have more orders than they can keep up with in the short term. But in the long term, once they get that factory up and running, a subsequent factory up and running, they'll be a killer. Mind you, China is very bullish on EV. NIO is actually backed by the Chinese government. A few years back, it got into some financial troubles early off, and China bailed out the company, right?
Yep.
Because NIO is going to be one of their flagships.
And I don't mean to cut you off. I want to point out one thing. You can see the headquarters of Shanghai, China. Despite the fact that NIO is a Chinese company, it is traded in the American New York Stock Exchange, so people can get in on that right here in America. And by being traded on our stock exchange, they're still required to have the exact same disclosures and still regulated by the American SEC. So.
Yeah, so they still have. I know it was a little bit of people got scared when they was talking about listing some Chinese companies. NIO had already put out a statement that they were aware of that and making sure that they were going to be compliant. So I'm not worried about that at all. I know a lot of Chinese stocks took a hit from that, but I'm not worried about that at all. Even if that was to be an issue, that doesn't even that can't even start happening until I believe like 2 years from now. So I wouldn't. That wouldn't be a deterrent for me from investing in the stock. But NIO's doing like a lot of great things. Go look at their newest model. I think it's the ET7. It's beautiful. They also have this little personal assistant called Omi that sits on your dash and has like a smiley face and does stuff for you. You can tell it to do things. Imagine like Siri or Alexa for your car, but you can tell it to do something and it'll do it. It's pretty advanced. What I'm seeing from them, I'm loving what I've seen from them. A couple other Chinese EV makers that can make some noise, XPeng and Li Auto. Those are also, I think Li Auto has a little bit more runway than XPeng because XPeng kind of run up a little bit more. But both of them, I think, are solid people. And I own all three for full disclosure. So we really only talk about stocks we own. I wouldn't recommend anything that I didn't own personally because that means I'm not that. If I don't own it, then there's probably a reason I don't own it. So I wouldn't recommend it to anybody else. But I love all three of those companies. But NIO is my top dog. I own hundreds of shares, and I don't see myself. That's one of my long positions.
Yeah, I'm right there with you on that one.
Yeah, I don't plan on selling either of those for a very, very long time. So they're going to make some noise. But let's pivot and let's talk about American EV automakers.
So yeah, that's a good one. And I want to give full credit, Zip Trader, the YouTuber Zip Trader. Definitely, I watched an excellent video of his. But we're going to put out a sequence of events. So we all know, and this has been public news, that Biden wants to replace the government fleet with electric vehicles. Combining that with Biden signing executive order strengthening the Buy American provisions. So we're going to be looking for American electric vehicle manufacturers. That that quickly limits it. So obviously we wouldn't be talking about NIO. Tesla is the biggest one. We do know that General Motors and other American car manufacturers are shifting gears to get into the EV department. But somebody's going to be making and replacing the government fleet with electric vehicles. Biden has named the former Michigan Governor Jennifer Granholm to lead the Department of Energy. Jennifer Granholm is the former governor of Michigan. Excuse me, look at me pronouncing that. But what's interesting is she also serves. So before I get there, there's an American manufacturer called Proterra. And if I can pull that up real quick, let's see here. Here we go. So there's an American auto manufacturer, EV auto manufacturer called Proterra. At the moment, they make buses, and they're working on electric buses and things of that nature. Why does that matter? They're going public soon through a 1.6 million special purpose acquisition companies deal. We'll come back to that in one. Yep, a SPAC. And we'll come back to that in 1 second. If we go to Proterra's website and take a look at their leadership, so this is right here, all public information, Proterra's leadership. You can see their leadership. And if we go down to their board of directors, who do we find here? None other than Jennifer Granholm, who Joe Biden has just named as the Secretary of Energy. She is yet to be confirmed, but she's expected to be confirmed to lead the Energy Department. It'll be the 9th woman Biden has nominated to serve in his cabinet, and she just so happens to be sitting on the board of directors of Proterra, which I'm sure, to prevent a conflict of interest, she'll give up her position on the board of directors. But knowing that we were going to replace the government fleet with electric vehicles that must be American, here we are. Proterra will definitely be right there and have a leadership position in the new administration's cabinet. And that brings us to Proterra going public. Now, they are not public yet, but they're going public through a merger with ArcLight Clean Transition Group in a deal valued at $1.6 billion. That will bring us finally to the ArcLight Transition Group stock. Again, we are not professionals, but this presents an interesting buying opportunity as we're unable to buy Proterra just yet. And here is the company that's going to take them public, the SPAC, ArcLight Clean Transition Group. I don't know about you, Mike, but it's definitely delicious to me, and I am in on it.
Yeah, I'm definitely going to get in. So when, like you said, when Biden announced the two things, one, that to replace the government fleet, which is over 600,000 vehicles, to make them EV, and also to buy American. So one thing you got to know, Tesla's not going to be a big player in this. Why? Tesla doesn't make those type of vehicles that would be in a government fleet. That's just not what they do. That's not their
not their bread and butter.
Yeah. So they're not. I don't imagine to be big players or have a huge piece of that. Existing players, Lordstown Motors. I think they'll get some of that. They'll definitely get some of that. They do a little bit of light duty pickups for EV light duty pickups. I do see. Workhorse, I see them getting some of that, especially it was already rumored that, not even rumored, they were going after the USPS contract to replace the USPS fleet with electric vehicles. So that more strengthens their position. Those stocks saw a significant run up off of Biden's announcement, both Lordstown and Workhorse. So those are other players. But Proterra is interesting. Proterra already makes buses. And they've already announced that they were already expanding into doing other vehicles. They also do charging solutions, so charging networks. And they also do batteries. They're making their batteries less expensive over time that can hold a greater charge and become more efficient. So those are all great things. I honestly think it's worth more than being a billion-dollar company at this point, based on what they've done. So when this reverse merger goes through, I think their stock will run up quite a bit. So I'm all in on that too. I think I have to decide how. The question is how much. And here's why I say it's still a risky play, right? Mm-hmm. Because this is a proposed merger. That means that this merger could fall to the floor, nothing can happen. Mm-hmm. And if this merger falls to the floor, go back and look at was it ACTC?
Yep, I have it up right here.
Yeah, look what it was before they made the announcement.
Let's see here, somewhere around $11 to $10, $12.
All right, right, so you'll see that price plummet back to $11 to $10. This merger.
This article came out January 12th. And if we look, you can see what it was on the 11th, and boom, there's the jump to $25.20 on the 12th after that announcement.
Yeah, so imagine that if this merger was to fall through, then
it's going to go right back to the, let's look over the last 6 months. Right down here, it held steady at the $10 range. So 50% fall off definitely if this merger falls through.
So this is a bit of a risky play.
Very risky.
If it goes through, I could see, what was it sitting at? 20, what was that? 23, 24 bucks? I could see it easily getting to 50, right? I could see it easily doubling if the merger is successful. It could run up to that much. So you're looking at doubling your money, but you're also looking at having your money if this merger does not go through. So it's a risky play. I'm probably going to get into it on Monday. I'm pretty sure I'm going to get into it. The question for me is how much risk do I want to take on? I personally, especially a lot of these EV companies, I like buying in increments of 100 shares.
I want to point this out as I gave credit to the Zip Trader YouTube. So then we take a look on our own and see what else is happening with the stock. And I want to point this out. This shareholder notice that has come up. Let's see here. Do I have that up? Yep, it's there. There is a investigation of the ArcLight Clean Transition Group. This was also announced on January 12th. So they're being looked at with the in connection with a merger. ArcLight Special Purpose Acquisition will combine that with Proterra. So they're being looked at and possibly might be sued. So these are things that may very well cause that merger, at least with ArcLight at the moment, to fall through. And as we mentioned, it will send those prices right back down, if not lower, than the $10 range it was prior to this announcement. So like Mike said, definitely a risky play. We are not professionals, so we recommend everybody do your due diligence. And when we say due diligence, I do want to, not to go off on a tangent here, but we're in the information age. You believe in Google, don't you? You can take a look and find a lot of this information just as we've done. You can see the pros, you can see cons, and you can find no end of articles, opinion pieces from actual large websites, large financial websites, CNBC, Yahoo Finance, things of that nature. And you, just as much as you can go on YouTube or Twitch, take a look at us or other channels that have discussed these things. So you got to do your due diligence. For those who are new to investing, you want to do research. You want to find things like this. This took 5 seconds to find. Just as fast as I were able to pull up those articles and draw that link where we know Biden's going to replace the fleet. We know he wants to buy American. We know he named a member of the board of directors of Proterra as the Secretary of Energy. We can also find the negatives in this. We know that we can see the price jump in the announcement. We can see the fluctuation, and we can see the negatives that might very well cause that deal to fall through. So when we say do your due diligence, we are professionals, risky plays. Don't be afraid to get out there, Google, and look for yourself. Please don't blindly listen to us or anyone out there in the social media space, no matter what kind of returns you saw out of the Wall Street bets. And I know it's gained a lot of information, but always learn to do your due diligence. Get better at researching these companies for yourself and compiling the information to determine what level of risk is acceptable for you and where you decide to put your money. Me and Mike, we definitely aren't masterminds, not yet, but we are experienced in an investment. We're experienced in taking a risk, and we're capable and more than capable of handling losses. So therefore, we can take risks. And, I'm going to buy some, full disclosures, I'm going to buy some shares of ArcLight. But I'm also, I'm not going to go all in. I'm not going to put my life savings in this or anything of that nature. But I'm going to buy some shares as we bring this to the public and tell everybody about this and show those connections. There's a risk in all of this. You can always lose your money, so you always want to do your due diligence and not listen to non-professionals like us on YouTube, Twitch, Facebook, or any other form of social media.
Yes, and you can't reiterate how much we are not financial professionals. We're just two guys trying to make a buck. So far, we've been pretty good at it, but we still have a lot to learn and we still have ways to go. But as we go on this journey, we want to take you guys with us. So we're doing this channel, and that's why we're shooting these videos, is to bring you guys with us. Now, one more thing about the SPACs, since we're on the topic of SPACs. There's one more SPAC I we're going to talk about, and that's CCIG. Now, CCIG is for Churchill Capital Corporation. They are proposing a similar thing with Lucid Motors. And now you have heard of Lucid Motors. It's going to be another American EV luxury car maker. And I'm not saying Lucid Motors because of what Biden did in terms of replacing the fleet, because once again, Lucid Motors is going to have a different clientele. Their clientele is going to be up, and they're actually going to do the Tesla way of things and release their most expensive model first, and then backtrack to more cheaper models. But they're going to be a premium luxury auto EV maker. They're American-based, and their cars are gorgeous. It's a very beautiful car. The company has good leadership. A lot of, I believe, the chief engineer over the Model S had is went over, and he's one of the key personnel at Lucid. So they have good stock there. Lucid, once again, is not a publicly traded company. They're looking to go public. That's the rumor on the street. And it's been rumored that both CCIB and Lucid will come together via a first merger. And, that's the way vehicle in which Lucid will go public. Now, same risk with ACTC. This cannot happen. Neither company has neither confirmed or denied that they're planning to do this this reverse merger to go public. Both are keeping pretty quiet. But if you read the breadcrumb trails left by both, even for the instance that one of Lucid's top execs is also a board member on CCIB Churchill Capital. It's not hard to see. But once again, it's a dramatic risk, right? Same thing happened here. I think Lucid got to an all-time high of about $25, and it's hovering around $22, I would say, a share. It's had a similar run-up from about $10 to where it is currently, and that's off of the speculation of this merger happening. Once this merger is officially announced and goes through, expect to see this also possibly 2 to 3x, right? And it's the same list. But if the merger doesn't go through, expect it to drop back down to $10. I'm in. I got in around $17 on CCIB, so I've already made some money. But I'm not going anywhere until I believe the merger will be announced. So for me, and this is advice for myself because I can't advise you, I'm going to stay in it. I have no plans of leaving because I think Lucid will be a playmaker. I think people are going to start turning towards some of these newer EV companies. BMWs, Mercedes, Audis, Lexus, they've been around for forever. They're slowly making the change into EV models, but I don't think they're going to totally change the game. These other companies, Lucid, Tesla, they're looking at the car and how it should function, how it should be a part of your life in a totally different manner than these traditional automakers are. And I think that will give them a leg up. So I'm all in on Lucid via the CCIB reverse acquisition. It's something to keep in the back of your minds as you're researching stocks to look into invest. Those are some of the prominent EV plays that we're making. And also, when we talk about EV, you also have to acknowledge all of the ways you're going to charge these vehicles. So you're thinking about Blink. You're thinking about another acquisition, SPE, which is going to acquire ChargePoint. That is another strong play for me. ChargePoint has about 70% market share of the existing charging network, and it's going to probably continue to try to grow that. And once that acquisition takes place, once SPE acquires ChargePoint, that stock has run up quite a bit, but I still think it's a good long-term play. That's a big position in my portfolio as well. So when you start thinking about EV, you got to start thinking about the whole ecosystem. Who's making batteries, where they're charging at, who's going to start making an ecosystem that's easier for these EVs to exist. At some point, we're going to start having to think about maintenance and upkeep. That's how's that landscape going to change? So when you start looking at any kind of brand new market, there's a lot of questions that need to be asked. And when you start asking questions and you're not sure, there's not a clear answer, you can do a little bit of research on it and find out who are the companies that are trying to lead the charge. There's a big advantage to being the first mover in any niche industry or in any segment. And you try to find who those early movers are and try to get you along for the ride. And with EV, that's a big thing. Like I said, I'm very bullish on EV there. That's the majority of my regular investing portfolio is EV. And probably, like I said, after AMC is done, I'll take my hopefully massive profits and dump that into more EV stocks. That's how I feel about that industry. It's almost a passion for me at this point.
EV is going to
So
be the future.
it is. And you think about just electric car, but you look at things like Tesla trying to do the electric semi. I mean, that is game changing. If you can find a way to make an electric semi, and they're also trying to make it self-driving, but with self-driving on the shelf for a second, that's a lot of money you can save in fuel costs, a ton of money. And what companies like to do best, other than making profits, is saving money. And saving money helps increase their profits. So that's something that they're going to look into. So you got to look at companies who are doing stuff like that.
And the bottom line is, we know that, be it 10, 15 years from now, in our lifetimes, we are going to see the end of the internal combustion engine as the primary method of ground-based transportation in the world. We're talking about fighting climate change, we're talking about going green, and we're talking about money savings for companies once this technology is transitioned to. The biggest barrier has been technology and the cost and barriers of entry, and there's been so many companies, from Tesla to NIO to all the up and coming, whether it's Lucid, Proterra. There's no end of EV companies that have been around for a while and developing technology to get the world there, so that we can have the batteries that can deal with the demands, the vehicle designs, the charging and recharging capabilities. We're going to see the end of the internal combustion engine. We're going to see the world go green with electric-based vehicles. And that's a long play. We're going to see a world where, you can think back 10, 15 years ago, where the idea of the electric vehicle was some tiny, ugly, slow vehicle that was uncool and you didn't see anywhere. There are Teslas everywhere now. As time moves on, technology is advancing, and we know that the Biden administration is going to push to replace the government fleet. There are rumblings that Democrats may very well pass legislation to rule that all vehicles be electric EV by some future date, 15
California
years.
already did it.
Yep, California's already done it. It may happen at a federal level. Other countries are going to be doing this. The world is marching towards electric vehicles. One way or the other, 10, 15, 20 years from now, we're going to see that world. So it's definitely a long play. We are passionate about EV stocks. That has generated the biggest returns for me personally, especially with Tesla getting on it before, as it began this rocket ship, its bride that it has been on over the past few years. And there's others, from NIO to, we're talking about them here, these ones that are going public. We're talking about Churchill, Lucid Motors, forgot to bring up the SBE SPAC stock. So, hoping, again, these acquisitions and mergers could very well fall through. But seeing, the jumps that it made after announcement, what we're looking forward to in the future. And EV's the future. I didn't realize this is based right here in Dallas, Mike. SB switchback. I just now saw that.
Yeah, I think I saw that at one point.
Oh, nice. Of course, Mike and I are here in North Texas. EV, man. Tesla's moving to Texas. But electric vehicles are the future. You can see there's other ones from Workhorse and Plug Power, and there's so much that's going. And we know that American manufacturers, GM, announced that they're going to a all-electric fleet.
And you know what? That Hummer that they put on that EV Hummer, I don't know how you feel about it. I love the way it looks. That you can almost do the Jeep thing with it, take off the doors, take off the roof.
All-electric by 2030 and phase out gas and diesel engines. America's largest auto manufacturer there's the electric Hummer right there. So we are well on the way. I'm a giant man, by the way. For those who do not know, I stand 6 feet 10 inches, and I'm over 500 pounds, so I'm a giant man. And I'm looking forward to the trucks and SUVs going electric. If I fit in electric vehicles all the way that they currently have, I'd already be there. Give me my electric Expedition. Give me my electric Navigator and Ford Expedition and things like that. I'll have my eyes on these other electric trucks. But EV's the future. And it's kind of like, people wish they knew the tech industry was going to be the future, and the internet stocks were going to be the future. And man, imagine getting on those in the early thousands and the 99s, especially after the tech bubble collapsed and popped. But getting on those and riding that wave, I think that is what we have in front of us over the next 10 to 15 years. These EV stocks are here. Some of them are. More are coming. And it is going to be the future. They're going to be mandated by various governments. You know, California's done it. We know GM is changing their fleet on their own. Ford is working on their electric, Mustang. You know,
they're working on the
electric
F-150
vehicle
too.
stocks are the future. We're passionate in them. Can't say it enough. We're also passionate to tell you that we are professionals. But can't say enough about the EV stocks, and the future is bright for them.
Yeah, and I think one thing to really truly consider is that with these EV stocks is they're not just doing it the same way that traditional automakers have. They're taking electric vehicles and they're blending it in with state-of-the-art software, right? And that software is a key element. That's why so many people, when Tesla was first making this run up, they were looking at it purely as an automotive company, which is false. It's a software company, almost primarily. Their software is what's going to allow them to do all the things that they plan on doing, that ecosystem they plan on building. And not to mention, they do energy on the side. So you got to look at the software capabilities that these EV automakers are putting into their vehicles. I mean, what NIO had described for their new sedan, I mean, the computing power on that means almost, it had been a decade ago, it would be considered a supercomputer in the car, right? That's how powerful these cars are getting, because they want to do, no matter how you feel about it, automated full self-driving is coming. That's coming. That's a wave that's not going to escape. And to be honest, if every car got automated and was full self-driving, probably the amount of accidents would go down. Most accidents are human error. I mean, that's just the short of it. So taking the human out of the equation, removing how you feel about that, probably would make the rate of accidents go down tremendously. But there's also a lot of cool things that can be done with it. Talking about using your car as a taxi service, robo taxis, both.
Imagine your car getting a job when
Tesla.
you weren't driving it. No,
exactly. So your car is making money for you while it's not there. While you're not there. So that's tremendous technology right there. That's a lot you can do. So it's a lot of things that are going on. A lot of innovations are going to be made. You're going to see some businesses die off, just like anything. You're going to see some businesses they weren't able to adapt, and they're going to die off, and you're going to see new businesses created. You're going to see jobs change. Your average mechanic is going to have to shift to understanding how to work on EVs. And you know what? That's going to be a little harder for them, because guess what? Electric vehicles are less complicated with their mechanics. They don't have a combustible engine with all these moving parts. It's just an electric motor.
Don't need oil changes.
You don't need oil changes. You don't need these fluids. You don't need transmission. You don't need transmission fluid. You don't need all these things that normal cars need. You don't need an electric vehicle, because it's just a simple electric motor. So you're going to see a lot of those changes. So, but just to wrap up today, look, we're excited for tomorrow to see what's going to happen with AMC and GameStop. It could be a crazy day, and also be a disappointing day. By that, I mean either stock go down, or it could just be going sideways, and that would be disappointing to some folks. So, but I expect whatever to do within the day is going to look volatile. Definitely be tuned in to what your broker says before the opening bell. I haven't been able to move everything off Robinhood, so unfortunately, pay attention to what they say and what they're going to do and what they're going to allow me to do
What is the
at the opening bell. So pay attention to that. Sometimes they don't. You have to go looking for it, or you won't find out until you actually try to make the trade, which is annoying. So pay attention to all those things. Make sure you do your research, get a good night's sleep, and let's get ready for the opening bell.
Yes, indeed. We'd like to thank you guys for being with us. Yet another live stream. There'll be more of them coming out. Be sure to follow us on Twitter. I just put it there on the screen there, at real_in the black. Be sure to check us out. Let's see here on YouTube. I'll put that one up for you guys. That's In the Black Money. There's the link right there in the chat. We appreciate you guys. We'll be back with more information. I will say it a million times, we aren't professionals, but we want to encourage thought in investing and thoughts to what stocks will rise in the future. These are our opinions, and that's all opinions of non-professionals. And we thank you all, and have a good night.